Focus on a set of numbers that looked quite strong though. Jubilant FoodWorks. Ajay Kaul joins in to talk about what has been another very good quarter for them. Ajay, morning, great Q3. Given what you've delivered in the first 9 months, which is just shy of 500 crores on the revenue line, what do you think you could finish the year with in terms of sales?
I'm sorry, I can't hear you loud and clear. Can you be a bit louder? Sorry for that.
What do you think you can do in terms of sales for the full year, Ajay, given what you've done in the past 9 months?
Okay, we have had a fantastic quarter which continues our performance for the first 9 months, as you rightly said. We are the largest MNC food brand today in the country. We are the fastest growing also. I think the momentum would continue, I believe, in the next quarter also. If I look at, specifically at numbers, 58.2% is our system level growth in this quarter, which is, which takes our full 9-month average at around 58-59%. Our same store growth, which is the true health of franchise measure, if I may say, stands at around 35% in this quarter, a shade lower than what it has been in the earlier 2 quarters. We believe the momentum will continue. I'll not put any numbers to this, but from a consumer sentiment level, if that's a question I would probably want to answer more upfront, we see no change in the consumer sentiment. To the contrary, we see a high optimism from a consumer uptake level, which means I think the discretionary spend on food consumed out of home, we believe, is only on the rise. And for products like ours, which are consumed at home, predominantly delivered at home, which are low ticket in nature, around $7-8, let's say in rupee terms, around 300 odd rupees outlay, I think we are very upbeat about the future.
As you look into FY12, Ajay, without going into any kind of numbers and guidance, the one thing that your investors would want to know is whether you think this kind of core same-store growth, which is generally regarded by the market as sustainable growth, whether you see any reason for that trajectory to change around as you go into the next year.
Well, let me be honest, if I look at last 6 years, other than this year, our compounded annual same-store growth has been around 18-19%. This year has been unprecedented by any standards, by our own standards. We have in the first 9 months delivered around 37% same-store growth. We believe such a large number is not sustainable, but of whatever we have done over the last 6 years, we believe such numbers are doable. Without putting any number to it, as you also rightly said, I think this year's performance probably is a bit of a one-off. But now what we have done over the last 6 odd years is something which we should look at.
How much of your incremental revenue growth, I mean, just going by the example of the last 9 months, is coming in from new store additions or new franchisees? Just want to figure out, on top of this core growth that you're talking about, same store, how much can get added on by new additions even next year?
See, if you look at this quarter itself, our same store growth is around 35%, give or take 35.2%, and our system level growth is 58.2. So the differential between the two, which is around 20 or 23% or so, is clearly stores which have come either last year, new stores, or the stores which we have added this year. But to put a number to the new store additions which we have done this year, and speaking specifically about let's say this quarter, because we take a lot of pride in that, we have added 25 new stores in Q3, which is this quarter, which is the highest we have done as far as I can think, in the last 3-4 years. So the net new store addition this year so far has been 58, and as we have said that during the full financial year we hope to add at least 70 new stores, and we are clearly on track of that, and we believe by March end we will be able to exceed that number. Going forward, we believe such numbers are sustainable. We should be able to add similar numbers even in years to come. What is interesting, out of this new store opening is that a fair bit of these come from new cities. As I have always maintained, new cities is where a lot of potential is, and we have been getting a lot of, I would say, good response from these cities. In the Q3 itself, we have gone to cities as diverse as Saharanpur, to a Patna, to a Bhubaneswar, capital cities, to a Howrah, to Zirakpur. So it's a fair mix, and we have been getting some good response from all sorts of these myriad cities. So 22 new cities is what we have gone into in the last 1 year, and even going forward, that's something which we would look into, getting into more and more new cities in India.
You've done quite a bit to cut down your input costs as well, Ajay. Are you confident of holding margins in this 16-17% range for the rest of the year, the calendar year that is?
Indeed, indeed. In fact, I would like to add a point to that. We have hung on to our margins, but our margins in quarter 3 actually have gone down marginally compared to the first 2 quarters, and there are specific reasons for that, which I need to highlight, which I presume would have come up in discussion in at any stage in any case. Number one, input costs. There is a fair bit of inflationary pressure on food. A specific ingredient, of cheese, which is a derivative of milk, and what kind of pressures are on availability of milk and the rise in costs of milk as an input and so on. While we did take a little bit of a price increase in November, but I think still it has added around 0.5-0.6% to our food costs, and that clearly has eroded the margin to that extent. The second is more to do with the way we are being the fastest growing food brand in the country, having become the largest food brand in the country, arguably the most successful in terms of profitability, people practices and so on. We are under constant, call it, threat of losing our employees. So we have taken actually an unprecedented salary hike for our people who work inside the store. It's around 18 to 20%, which we took in September, and the full impact of that has come in this quarter 3. Also, we started a very unique incentive scheme, which is kind of driven by EBITDA-led incentive scheme for the first time at the supervisors within the store. Till now, store managers and upwards were on all sorts of incentive schemes. For the first time, we have introduced it inside the store, a variable scheme. That has again led to a bit of a pressure on, I would say, the people line. But this is all investments for future as we keep growing at the same unprecedented pace, and to stay ahead of the curve, ahead of the competition. These are investments for future.
There was some surprise when Starbucks decided to enter into an alliance with Tata Coffee. It's an organization with which your name has been associated very often. Would you like to comment on that, on where Jubilant FoodWorks' conversations might be with Starbucks, and whether that's still open in terms of their entering India via you?
You guys just don't give up. Okay, firstly, no comments, on this part B. Only as a spectator than anything else. A comment on part A is that the agreement between, as we learn it from the newspapers and so on, between Tata's and the Starbucks is basically a sourcing agreement, where the coffee which will get consumed at the retail end is going to be sourced from Tata. Now that is our understanding, but no other comment on any other part A's, part B's questions asked for you. I know you don't like me for this, but I can't help it.
You like your pizza, if that counts. Ajay, thanks for joining in today. That's Jubilant FoodWorks, strong quarter for them. Stock should be up on your screens in